let's start off with a look at the local unit because it was on the flat line yesterday with forces pulling in opposite directions. Your view on where we're headed in terms of currency movement over the short term?
I think over the short term, as long as the central bank, if the central bank stays out of the market, we should see it trading pretty flat, considering the political tensions that were there that caused the volatility we saw last week have cooled off. So if the central bank stays out, it should trade pretty flat. But if they do come back in, we should see some activity, or we might see the shilling weakening. As I was
saying earlier, political noises have been easing back a bit, but the market's still keeping an eye on those developments because a stalemate has come to bear between President Mwai Kibaki and Prime Minister Raila Odinga over those judicial nominations. And ultimately, this issue is still unresolved. So how much of a risk factor are you pricing in on account of that?
I think the political tensions, we've crossed the biggest hurdle where they've decided to come to, both have decided to come to the table. So now we're just left with agreement on one position, that of the Attorney General, which I don't think will be that difficult. They didn't come to a decision yesterday, but we hope maybe by early next week they'll have come to a decision. That's why I think it will not really have that much of an impact on the currency.
Important for the shilling is growth and production within the agricultural sector specifically. I mean, as that drives a large bit of forex earnings. Sassini yesterday saying that it faces an uncertain future because of drought and rising oil prices. What's your outlook in that regard? Earnings capabilities from sectors like agriculture, like tourism, to actually support the shilling moving forward?
The outlook on tourism is pretty positive. Agriculture, not so positive, but I think by around mid-year, we should be coming out of the drought season, and towards the end of the year, we should be seeing positive results from a lot of the agricultural counters and the agricultural sector.
Let's take a look very quickly at the equity space. With the bank's results trickling in, the expectation was for the market, on the equity side of things, to see some reprieve, and that seems to now be coming through, albeit slight. What are you making of current market sentiment?
Okay, a lot of speculators are in the market because with Barclays having positive results at 51% growth, and it being the largest bank by capitalization. So we're expecting most banks to post positive growth. So we will see speculators coming in, and we're seeing a lot of banks issuing bonuses and pretty good dividends compared to the previous year. So speculators will still come into the market to pick up papers and before books closure.
Let's take a look at some of those results because NIC was one being anticipated today. Out with numbers this morning, a strong dividend, also bonus shares being issued there. Your overall impressions of those numbers?
NIC showed pretty impressive numbers on the back of, I think their lending book grew in the year 2010, albeit conservative. So the numbers are pretty positive, 71%, and the dividend is, for NIC, that's a pretty good dividend compared to previous dividend payouts. I think the other county that released results was BAT, where the results were, the market was a bit disappointed. They weren't as good as we expected, considering BAT is almost a monopoly in the market. But if you take into consideration the tough regulatory environment they've been working in with the taxation, the anti-smoking laws, you'd say they gave it a try.
Let's take a look at forecasts for KCB because those numbers being anticipated, and as I was saying earlier, over expansion, the market's saying is expected to slow down the kind of pace we could expect to see out of KCB, especially with its Tanzania and Rwandan outlets yet to break even.
KCB, I think most people are being conservative on the expectations for their results, as you said, because of the expansion we've seen. So we'll just have to wait. But I think my projections are pretty conservative.
Let's take a look at the bond market side of things because it seems to have posted improved activity. So run us through some of the activity you're noticing on that end.
Yes, the results came out this morning for the 30-year and 2-year paper. On the long end, the 30-year paper, the results were pretty encouraging. I mean, with an average of about 12.9, sorry. Cutoff is not clear, but we're estimating cutoff was about levels of 12.9. I mean 13.9. So that was really encouraging for the market. It's brought in a lot of confidence. We are seeing a lot of activity at the long end, quite a lot of interest in 15 and 20-year papers. In the coming 1 to 1.5 weeks, we expect yields at the long end to come down by an average of about 50 to 70 basis points.
Is there a distinction to be made between local investors and foreign investors in that space? Because certainly on the equity side of things, we've seen foreign investors pulling out pretty aggressively out of that equity space, where they usually make up about 70% of the trading on that end.
I think with the equity and the fixed income market, the correlation is not as strong as you think, because with foreign investors pulling out of the equity market, our local fixed income market is not really driven by foreign investors, and does not react the same way as the equity market to political tensions or regional tensions. So, mostly, I think we're very localized. Mostly local factors such as primary issues, treasuries, domestic borrowing program. Those are factors that will affect the fixed income market.